All right, man. Let's get into it. Let's see what we got here. Bollinger Momentum Traders. Everybody that's here know the name of the group by now. All right. Looking at the trades that we took today. Let's see if we make this bigger. Way here. So 7:39 call. We were bullish on the day. Got on the 87 call. Got out 93 cents. That is six cents, $6 difference. Then got back into the trade about 2 hours later and got in at 33, scaled in at 35. So that brought the average down to 34 and then got out at 36. So two contracts, $2 move, $2 for each contract. That's a $4 profit. So a little small profit today. Just trying to build a confidence back up from taking three losses last week. Understand that the strategy still works. Show you what we were looking at here today. So let's see. So this is Robinhood Legend for people who are curious as to what I'm using to find these trades. And so I'm just using the Bollinger Bands um, and Momentum. That's it. That's why it's the Bollinger Momentum Traders, right? So momentum basically is, if we look here on the left top at this candle, this is a strong candle. It has strong volume. That's what we call momentum. So then here, if we go over to the uh, Asian session and London session, the Robinhood Legends give you 24 hours in the data, whereas Trading View only gives you um, up until 6 p.m. Asian session, and then there's a jump to 3 a.m. London Open, right? So Robinhood Legend give you 24-hour data as far as like candle formation. And so it's really helpful having all of the information as a whole, as opposed to having partial information. So looking at the cues, we see the consolidation here. If we skip over to the right-hand side and the spies, we see consolidation here. Okay. And again, those consolidations are above the Bollinger Bands. All right. Above the Bollinger Bands. If we come down here to the left hand bottom, we see prices below the Bollinger Bands here in the Bollinger Bands right before the open. So that's no trade. That's a no trade zone inside the Bollinger Bands. Even though after market open, price did push up, but we're looking at price right before the open, looking for consolidation zones and for the DIA, Dow Jones, US 30, they were price was stuck in the Bollinger Bands. So that's not even a consideration for trading. If we look to the bottom right hand side, IWM is Russell 2000. Same thing. We have price at the bottom of the Bollinger Bands, and we're stuck in the Bollinger Band, and then we come out right before. So uh, possibly could have a trade opportunity there, but at the very open, there's no trade opportunity because if we look right here at this candle, we have a big wick on the bottom, I mean on the top, and then a small body. So that's basically indicating that sellers are stepping in and pushing price down, right? So if we're looking to go bullish, this candle right here is an indication that we need to be cautious, that sellers may be stepping in and pushing price down. So the trade that we took on today was in the spot, based on the momentum that was forming. If we look at the candle right before market open, you see a wick at the bottom, and that means that buyers are stepping in, pushing price up. So if we look over here on the cues, we have that same candle or wick at the bottom, and then body formation. However, uh, that wick and that body are much smaller, meaning that um, it's not as many buyers on the queues that are pushing the price up. Whereas over on the SPY, we have more buyers pushing price up. So we took a trade on SPY today. Let's go over to trading view and take a look. what we saw. All right. So starting on the hour chart, to get rid of this, we have our levels marked up here. We have our levels marked up. Uh, Light blue is previous day levels, so previous day low, previous day high, and then the green and the red we have pre-market, uh, pre-market high and pre-market low, or you could say overnight high, overnight low, because this is marking up the Asian session right here in this area. There's a nice consolidation formed here from yesterday into today, into that overnight session pre-market. And so if we drop down to the 15, we can see that we have some consolidation here from what is that 4:45 a.m. to 7. We can pull that over, and we have a good consolidation zone there. Um, so also too, another confluence is going back to the 1 hour and marking up that 3 a.m. London candle. We mark that up from the high to the low, drag that across, and what we see is that price is stuck at the moment, but when market gets closer to market open, price goes above that. And so because of that, we are looking for buys. So back to the 15. All right. So 15, here's your ORB for the 15-minute. Price pushes up. So that's in alignment with what we saw on the 1 hour over on Robinhood Legend. And so if we go down to the 5 minute, take a look at that. Nice strong candle at the open, plus volume kicks in. And so I was a little late on this entry. That's why I closed it for a small profit, because I got in somewhere further higher up, and I didn't want to take the chance for price to turn around and come back against me and stop me out. And so I went ahead and closed the trade. But the entry should have been right here at the break. Let me get that trend line. So entry should have been right here at the break. Uh, Once price broke above that, then we should have been entering the trade, and we could have got a much better trade, much better entry on that at, let me see, what was that price? So it was 87 when we got in, but I think when I saw it, it was around, man, I want to say it was around maybe like 38 cents or something like that. And I can double check that. Let me see. Let me go here, SPY. And this was the what was this? 7:39 call. All right. So let me go over here. Go to options, call, buy, call, 7:39 was right here. And so yesterday's close was $1.29. But then when it opened today, it opened at 2 cents. So imagine the gap between $1.29 to 2 cents. And then the high on the day was 185. So if we got in at 87 cents and it went to a high of 185, that's a 113% profit that we could have had on the day from our entry point. Now, if we got in at 2 cents at the very bottom, that would have been a 9,150% gain on the day. So that means that if you got in at the very bottom when market open, $100 would have turned into $9,150. So that's the power of options trading. We did not get in at that level. And so we got in at 87 cents, which was a late entry, very late entry. And at the high of that, it went to 113. Another way, well, this option is closed now. I was going to say another way. Let me add it to the watch list here. Yeah, see, it won't even add it because the market is closed. So going back to trading view. So price pushed up. All right. We look at volume to go with that. Price pushed up. Volume is good. Candle is good. Price is still pushing. Volume is still holding strong. And let's see where we got in on the second entry. Let's see. Second entry came at 10:37. The first entry was at 8:55. So 8:55 is going to be around here. So if you see, this is very late entry. Let's see right here. This is a very late entry on this compared to where we should have gotten in. You'll see how much of a distance that is. That's a 59-cent move. So we got in at 87, I believe. Uh, shoot, 87, I think is where we got in on that. Yeah, 87. And so minus 59. Let's see where we should have gotten in at. So 87 minus 59, 28. We should have got in at 28 cents and wrote that 28 cents up. So 28 cents, that would have gave us a 561% gain on the day. All right. 561% gain. So $100 would have turned into $560 if we had got in where we were supposed to. So again, the strategy does work. It's just the execution that we're working on, trying to refine. Um, so, all right, me. So that was the entry there, 8:55, and we said the next entry was at 10:37. So let's see, 10:37, 10:37, which is late because I'm typically not trading until I stop trading at 11. So this is 35. So we're somewhere around here. Um, and we can go down to the 1 minute and see where that entry was. All right, so we're over here somewhere and 37, 35. So at the close of this bullish candle, we got in the trade, took it up, took it up, and then we got out soon after. Let's see where we got out at. We got out at 10:54, 10:54 exit. So 10:54. So right here at the close, we got out right here. This is where we exited the trade, and then price continued going sideways, sideways, popped up again, and then it eventually, ultimately fell, and then it bounced back at 12:20, went back up again, and came back down again. So, um, looking at other opportunities of how we could have got back into these trades, there are other strategies that we could use. Like here, we have a order block or an order block right here. And so if we look there, price broke out, pulled back to the order block, rejected. And then again, as soon as it crosses above that box to the top side, that would have been an entry there at 9:30. So we could have got an entry there. And again, that would have been that same entry here at 8:40 if we had got in at 8:40. That's what we missed. We missed that entry, which would have been a better entry, that 28 cents entry. Instead, we got an 87-cent entry that was way up here. So we could have got re-entered here and then rode that back up as well. And also too with the Fibonacci, we could throw that on there as well. Let's see. The fib, since we're on 5 minute, all right, start at the bottom here, run that up, and from here. And so then based on that fib, we had to pull back to the 25%, or better yet, see if it worked better here. So this was the first push down, right? And then push up. Price didn't quite get there. Okay. It kept going up. So then we followed that fib up to the next level here, then kept going up, followed up to the next level. And then price came back, hit the 25%, hit the 50%, bounced off the 50% perfectly, and then continued up. And then we would have been targeting on the day a 2.0, or we could also modify this and put in the negative 1 and 1.5. And we didn't get anywhere close to that today. So again, it was a tight market for today, but we did make some profit, even though it was a small amount of profit. And if we go to the VIX, see what we were looking for on the VIX. So at the open, 8:15 right before, and we had 8:30. Price is above 18. So then medium volatility, high volatility, looking for momentum bursts, looking for momentum plays at the open. And if we go back to uh, SPY, you see this burst right here, that push up. It wasn't as fast as I would have liked it to be, but price did continue pushing up at the very open up until 11:30, which is when price started to fade or pull back and then continue before hitting consolidation, creating a flag or a wedge, and then failing here. And so then it just continued to fail at 1:30, and then it just fell for the rest of the day and went back down. So that's what I saw, how I saw the market today. And I will see you guys on the next one. Peace.